For more on the crisis in Ukraine and what it means to the global energy market, and also the role of China and Russia, I spoke to UCLA political science professor Daniel Treisman. He's an expert on the Russian politics and economy.
At present, it looks like something very similar to what happened in the Crimea, a kind of stealth operation involving local volunteers and also undercover special forces or intelligence agents of Russia to try and establish control on the ground in these places. Now, whether or not that would then lead to annexation by Russia is, of course, completely unclear. But Russia seems to want to up the stakes and to establish a fact on the ground. Now, the markets, of course, are going to react to that. The oil and commodity markets always react to uncertainty and instability of any kind. So I think we'll see a bit of that. In the longer term, there's no knowing how this will play out. In terms of the gas market, we don't really know. The experts are split on whether the market is going to be increasingly tight over coming years or whether Japan recommissioning its nuclear power plants is going to reduce demand significantly and lower the price of especially liquefied natural gas.
We had the United States, its European allies, put together sanctions against Russia and some of the large Russian investment gurus out there. The purpose, by the way, was to de-escalate the situation. Clearly, that doesn't seem to have worked. Did the sanctions work at all, in your opinion?
Well, I think the goal of the sanctions was never, or nobody expected the sanctions to have an immediate visible effect. The idea is to initiate changes behind the scenes. And I think Russian business people, the Russian business community, is very nervous about this. It'll take some time before we really know whether this is creating pressures within Putin's inner circle, within the business community in Russia, putting some kind of pressure on him to change course. Of course, this all takes place secretly out of the public gaze. And at the moment, the public is in the state of euphoria over the Crimean operation. As I think public opinion starts to settle down, that's when we should expect to see or expect pressures to be brought to bear on Putin that might become more visible.
There's a lot of talk that Russia is looking to the Far East, in this case, China, for offsetting its investments to China from the lack of investments or the cutback of investments between that and the United States. Is that a viable option to look east?
I think it's largely a bluff. Clearly, Russia would like China to step in and save it from any negative consequences in Europe. But if we look at what's happened in the past, the stock of Chinese investment in Russia as of the end of last year was about $32 billion. That's about 8% of the total foreign investment in Russia. So not a huge amount. Clearly, that could increase. In terms of longer-term economic relations with China, Russia's been negotiating for 10 years on a gas deal to provide 38 billion cubic meters of gas per year to China. Russia would have to build a pipeline for this, and they haven't been able to agree for 10 years on the price. And very simply, China wants a low price, and Russia wants a higher one. Now there have been hints that Russia will lower the price it's willing to accept. But I've seen estimates that suggest that at the price that China is asking, it wouldn't be profitable for Russia, for Gazprom, the Russian gas company, to develop these gas fields. So the potential for China really to make a huge difference in Russia, especially in the short run, it seems to me pretty limited. And it's wishful thinking on the Russians' part, or else it's a kind of rhetoric to try and increase the pressure on the West.